Okay, hi, I'm Don Danbrook. I'm a certified general accountant. In a previous life, I worked for CRA for about 10 years as a tax collector, tax auditor, and a team leader in client services. And as Fernando said, this is Walter Gagin's tax presentation. He just did a nice job on it, and most of it, it's all still applicable. So we're mostly going to, mostly about tax and maybe just touch on RRSP slightly. The gentleman before, I think, gave you a nice overview on the RRSPs and RESPs and our DSPs. There's a whole variety of those, and but we'll just touch briefly on the RRSPs and we'll go from there. So there's your tax tips coming up. Okay, tax season is fast approaching. So here are some of the things you consider when preparing your documents, as well as some of the resources to go to in case you need more information. Canada Revenue Agency, if you call in, very helpful. They generally are. So we'll on to the next. And again, you already heard quite a bit about the disability tax credit. What is it? As you heard, the credit's available to people who have severe prolonged mental or physical disabilities. Who is eligible to qualify for this credit? You need to fill in the T2201 disability tax credit form. That's what it's called. You need to get your doctor to fill this form in. File it with the local tax center. As you heard before, it doesn't necessarily have to go with your tax return. This amount from the disability tax credit can also be transferred to a spouse under certain circumstances. Regarding transferring, well, that sounds better. For more information, sorry, I should have asked, so I guess you can hear me now. Okay. Anyway, if you need more information on the disability tax credit and transferring amounts and so forth, it's a good idea. Just talk to Canada Revenue Agency, look at your tax guide, or talk to a tax professional. I don't do that anymore personally, but Walter's information's at the end here, and he's happy to help, particularly folks with disabilities. So we've got medical expense tax credit, they call it. It's a non-refundable tax credit, but how does the expense qualify? How does an expense qualify? Basically, you need to, there's a long list of expenses that do qualify. You need to definitely keep your original receipts because they may ask for them. I know I always found mine because it's about an inch thick of these receipts, and they always seem to want them. And you might want to note they should be stamp paid too. I got caught with that once, and then they won't. I said, well, which ones? And they said, well, I don't know. Check it out. So good idea to get them stamp paid. Original receipts by a licensed practitioner or a medical supply place. They'll take those. In my experience, when are my expenses eligible? Well, when they meet those criteria, and they be claimed every year on your tax return. Each year, when you fill it out, it's a T1 MED, I believe the form is called. So that's you'll claim that on your return each year. Unfortunately, they would deduct 3% of your net income, so you lose a bit. So we'll talk about some other credits after that are the disability support credit, which you don't lose a percentage. So we'll let's see, maybe on to the next. Did we miss something again? Yeah. Okay, no, we already told you that. Yeah, the calendar year. Yeah, your tax returns are filed Jan 1 to December 31 for each year. So that's your annual return. That's good, thanks. And more. Extended medical health benefits. Where are we? Monthly premiums for private health insurance cover may be claimed for those, for example, if you paid $50 a month towards your private medical coverage, then that could be claimed there. What we should note is your monthly MSP or medical service plan, those are not claimable, so you can't claim those. Okay, here we have an example. John submits $350 in medical expenses to Acme Insurance. You must pay the first $50 as a deductible and gets 80% coverage. John reimburses. Yes, that's the example here. When you get say, for example, the 80% refunded from the insurance provider, then you claim the other 20% again on that T1 medical form in the T1. Well, that's what I just talked about. I guess I jumped the gun there. What expenses are allowable? Well, there's a lot of expenses, a long list of allowable expenses, some of which will be coming up shortly here. So following is intended to be the most common expenses, so it's not an exhaustive list. Certainly prescriptions, wheelchairs, wheelchair repairs, user fees for services, massage therapy, OTs, PTs, any of that sort of thing. Payments to the, yeah, if you have doctors, dentists, bills, those sort of things can all be included in here. Just again, keep your original receipt. Attendant care expenses, they can either go here or we'll talk about the disability supports. So that's what I'm saying. You can claim that in two spots. If you claim it as a medical expense, again, for example, if you made $50,000 your net income line 236, they would take 3% of that, say $1,500. So the first $1,500, you basically you sort of lose out on that. So, but anyway, that's attendant care expenses. Vehicle conversions, those are deductible. Vehicle conversions to make your van accessible, typically a deductible, again on the same form. Typically, the vehicle conversion is often about 50% of the purchase price. So the dealer could give you, you know, if it's a new vehicle or when you buy it. I know when I bought mine, the person I bought it from was in the business. They just said, yeah, we just consider it half because it's about $30,000 van. It's about a $30,000 conversion. You got moving expenses. Certainly, I suppose you need to move into an accessible. Cost of transportation by ambulance or from hospital. Well, yeah, again, just save the bill. They'll charge you for that if you're unfortunate to have to go to the hospital. Yeah, certainly guide dogs, hearing, service animals, that sort of thing. You can also reasonably claim the food and so forth for your service animals. It's something that you can do. Relevant costs, the food, veterinary care is another one for your service animals, if you have those, which you might not think of. They must be specifically trained to serve as a medical dog to qualify as an expense. For that, renovations to the residence designed to make your house more accessible. That includes ramps, indoor or outdoor, enlargement of halls or doorways, lowering of sinks or shelves, that sort of thing. Those are claimable. What about disabled dependent? Medical expenses can be claimed for children, so if they're born now 95 or earlier, so they still have to be 17, but during the year, and you can claim your children's medical expenses or your grandchildren, or anybody defined as a dependent, so they would have to be living with you December 31, and that's sort of defined under the Act. If you need more specific information on this sort of thing, it's called IT, it's an interpretation bulletin. It's IT 519, or just talk to a tax professional for more specific information around claiming your dependents. What if I build a new house? Well, what I've got here, renovations to your existing home are allowable, providing they're reasonable. Yeah, see, there you go, only the incremental cost of the home. Yeah, that's, expenses must be reasonably considered to be incremental costs incurred to enable the individual access to be more mobile or functional within the home. So that's the CRA definition. And again, reservations, they're allowed, providing they're reasonable, again, ramps, that sort of thing. Disability supports deduction, and this is where I talked about the medical expenses versus disability supports. What's included in the disability supports deductions? It's important, you can't claim the same expenses as a medical expense as well as a disability support deduction, so it has to be one or the other. Now, the disability supports deductions include wages you paid, as well as any employer's contributions, your CPP, your EI, WCB, our expenses are added in that. The attendant may not be your spouse and must be 18 years of age or older. To claim the deduction, you must qualify for the disability tax credit again, regardless of whether you or your spouse actually claims the credits. Allowable disability supports deductions are those incurred while persons worked, took a training course. If they took the course, if the funds were received under the National Training Act, or if you conducted research or similar work, if there was a grant received, those are also deductible. These are all wage costs for the disability supports deduction. Should note, if you're planning to claim disability supports deduction while training or conducting research, it's important to contact CRA or a tax professional to obtain more information on calculating the actual expense amount. So we've got what's restrictions. Again, it has to be pretty much wage income. The other thing you don't have here, you need to have earned income to claim this. So there has to be a certain amount of income that you can attribute these wage and salaries towards. So I mean, if you don't have that, then you either claim it as a medical expense because this one's a little bit stricter, but it comes right off the second page like an RRSP, as opposed to the medical expense, which is a non-refundable tax credit, which it's just a little better deduction if it comes right off income. So to qualify again, disability tax credit, and it's got to be for payroll wages. So. And if we can get the next. So the RRSP, what's an RRSP? Well, we heard a little bit earlier. It's a registered retirement savings plan. How much you can contribute is based on your previous year's income, what they call earned income. So it has to be either income from employment, income from business, that sort of thing. So it's 20% of that amount. And when you get your notice of assessment from CRA, it will actually have a maximum RRSP deduction amount on that notice. So when you're filing or going to buy if you are going to buy your registered retirement savings plans, you can either look at your previous tax form. I mean, you could call CRA if you didn't have it, but have it there, and it'll be based on the previous year's income. So you have to have earned income. And as you heard before, this is more of a tax deferral thing. And often I see, where people had good incomes and they get a good pension and you have a good, well, you get Canada pension as well. you know, you might very well be getting, because you get taxed on the money when it's taken out, so it's, you might very well be getting taxed at the same rate you put it in, so there's not specifically a tax benefit, except that you don't get taxed on the interest during the time that it was in there. But, you know, CRA is going to get you in the end if they can. It's, when you take it out, they'll tax you on it, so it's just tax deferral. But that's, we don't have too much about RRSPs, but I had a good review this morning. The first-time home buyers plan, what if I use the first-time home buyers plan in the past? As I understand it, there is an option to use this again, even though it's, by definition, it says first-time home buyers plan, but Woolley explained to me what the circumstances you could do that, because I understand he did, but I don't have experience with that, but certainly the guide is, will fill you in on, if not that, just call CRA, because often these things are kind of complicated, and if there's for example, like an interpretation bulletin or information circular, or even, but I think just the best thing, if you talk to somebody at the tax office and, you know, just say, here's the situation, because it's very particular, and typically it is just set up for a one-time thing, so that's kind of an unusual situation. But
I believe this one's based on a disability tax credit, so if you qualify for that and you've already used it, part of that allows you to apply that first time buyers again if you have that option, if you have RRSPs built in. So there's a lot of different factors.
Well, with the home buyers plan, yeah, the idea is you take the money out of the RRSP. You know, that's sort of its, the gist of it. So you've got money in an RRSP, they'll allow you to withdraw the money from the RRSP to use it for a down payment on a house, which you don't see here. But then what they want to see you do is pay that amount back into the RRSP over a period of, they'll allow you up to 15 years. And then there's a form when you fill out your tax return to kind of show how much you're paying back and forth. And that's kind of how the first time home buyer plan works. But we have a question from the back there, quickly.
I read that you put up first-time buyer and you bought, and then you sold, and didn't own anything for 5 years, then you can become a first-time buyer again.
Okay, so if I understand correctly, you were a first-time buyer, you bought, you sold, and then you didn't buy again for 5 years, then you were eligible again?
After 5 years, I read that you were eligible again.
Okay, so there you have it from someone with experience. Perfect, thank you so much. Okay, so did everybody get that? If you're a second-time home buyer, you have to have sold and then not bought within 5 years, correct? Yeah, okay, great, thank you. And okay, now brings us to education textbook amount. What is it? Well, the education amount, you can claim up to $400 for each month of full-time attendance at a qualifying educational institute, provided you have the school complete. It's a T2202 education amount certificate, and they're all very familiar at the universities with that. UBC, I get mine off online. You just pull it off. How much can be claimed? When we claim it on your tax return, when you file it each year, that seems to me you might be able to carry forward if you don't need it to a subsequent year. If you're a part-time student, you may also claim the full $400 a month if you attend school part-time because of a mental or physical disability that prevents you from attending full-time. So there's that option, and you're also eligible to claim a textbook amount only if you're entitled to claim the education amount. The textbook amount is $65 for each month. You qualify for the full-time education amount, and $20 for each month that you qualify for the part-time education amount. So you can claim some of those. A lot of the courses now, like I know the CGA courses, UBC courses, the professional real estate courses, they just include that right in the tuition, and it saves you the trouble. The fuel tax rebate, to claim the fuel tax rebate, you must, you have the medical practitioner complete a certificate of disabled status, which you which will be reviewed by the Minister of Finance and Corporate Relations to determine your eligibility. If you qualify as disabled under the Motor Fuel Tax Act and are the registered owner of the motor vehicle, you may be able to claim a provincial fuel tax rebate. To claim that rebate, you must submit a fuel tax rebate form supported with all relevant fuel purchase receipts. Yeah, I claimed that one. I haven't claimed the federal one. I know the provincial one's the one they're talking about here. It's up to $500 a year for that one. And how do we claim it? Well, certificate of disabled status. $216. Yeah, I did have the form once, and yeah, so it sounds like it's minimal, right? Yeah, because and we were talking about it earlier. I used to, when I had the big gas guzzler and used a lot of gas, I used to get the full 500 from the province, and yeah, now I get about half that. So the federal one, it sounds like from the folks that. So it's quite a bit smaller, the federal one, than the provincial. So it's, but if you use a lot of gas, it's. I do get the provincial one. I do get a bit of a break on my insurance. I'm not sure the percentage, but yes, that's true. If when you're buying your insurance, your vehicle insurance, that's worth it's worth trying, pointing that out. And I don't drive my van, but I still get a deduction there. So, but 25, 35, 25, 30, up to 35. Very good. Well, that's good. Thanks, guys. Okay. Additional resources. So, for more detailed information on the deductions and other credits, as I mentioned before, the interpretation bulletin, they call it an IT. I'm not really sure why, it's federal government, but so IT 519 is the interpretation bulletin. It's a guide of medical and disability related information. They're available at Canada Revenue Agency, so that's www.cra.gc.ca, or you can call them at 1-800-959-2221, I guess, your forms. That's a forms request line. Yeah, there's the information line, 1-800-959-8281. If you just want to ask questions. And basically, most of these forms you can pull off the website. I think just about all of them. Get them in PDF or what have you. And it says, I'm Walter Gagin. No, I'm not. Here we go. Okay, more than just numbers. Walter Gagin, who prepared this fine presentation, is he's very busy. Right now it's tax season for him. That's why I'm here. But he is available to help with bookkeeping, accounting, payroll, for your small or medium-sized businesses, personal, corporate tax preparation. He does a lot of CECL accounts, from what I understand. He's known Walter for about 18 years, and he's been doing CECL bookkeeping for that time. So he's good at it. He's got a real good system. He'll help with your fuel tax rebate preparation and any other customized services you might want. Now as I said, he's very busy, but he wants me to let everybody know that he goes out of his way if it's somebody that has a disability and if he can help in that regard. So it's always worth giving him a call if you need a hand. He's happy to talk to anybody if they're looking for his help. And he's a good guy, and like I say, I've known him 18 years, and he's been doing it for that length of time, and so I think he's got a good system over there. So if you need help, for Walter Gagin, I don't. I can read it to you. Are you able to? Oh, okay, it's the last slide. Yeah, it's on the last slide of the presentation, so, and he's happy, just give him a call for sure, and he said no problem, he's happy to talk, and if he's too busy to help, he said he would